Well, CPI data out this morning saw inflation tick up in August, coming in slightly above estimates amid rising gas prices. August marks the second straight month the inflation measure has increased after 12 months of declines. Investors are near certain that they'll see a pause at the FOMC September meeting, now just 7 days away. But what does this latest data point tell us about the Fed's path moving forward? Joining us this morning is Ellen Hazen, who is the F.L.Putnam Chief Market Strategist. Ellen, great to have you on here with us to begin the show and really wrap our heads around what the CPI print means for how the Fed is going to be discussing now 2 consecutive months where we've kind of exceeded expectations, but that not being a good thing here in terms of where that CPI print has come in. Where might it shift their tenor?
Well, right now it looks as though the market is pricing in a hold next week, as we had thought, and a 25 basis point increase in November. I think that only becomes more certain with this most recent print because we did see inflation come in a bit higher than anticipated, and particularly the energy component. And given what we're seeing in terms of Saudi Arabia and Russia and OPEC withholding barrels from the market on a daily basis, we think it's likely that the energy component could remain higher for longer, thereby reinforcing the impetus for the Fed to hike again in November. And then beyond that, we'll have to see what happens.
And what are the implications then for the market, Ellen, if indeed, I mean, that's sort of what's expected here. It's usually the unexpected that throws the market for a loop. But if that does sort of play out as we're looking at here, what does that imply for returns from here till year end?
We've already seen such a strong market year to date with the S&P, and even though some other areas have lagged, like small and mid cap, those are still up nicely year to date. So I think from here going forward, the path becomes a little narrower for the Fed to achieve that soft landing that they've been trying to get, because they're going to have to be higher for longer, and it may be that they need to even increase beyond November. We don't know. But given the returns that we've seen year to date, we wouldn't be surprised to see an exhale of the market in any of the areas of the U.S. market, large, mid, or small. I do think that if they can pull off the soft landing, then we're going to get a broadening of the market, just like we saw in June and July, but which ended up going backward in August and September. If they can achieve the soft landing, then the concentration of the market in this big 7 tech stocks is going to reverse, because if growth is not so scarce and we achieve this soft landing and we're not going to hit into some kind of a recession, then you can see some of those other areas that are much cheaper to do well. On the other hand, if they are not able to pull off the soft landing, then we're going to see the market continue to be concentrated. So I think from here till year end, would not be surprised to see a pullback from here. But if they can achieve the soft landing, look for the market to broaden out.